Great state of Wisconsin ranked for taxes on its retirees. Let's dive right into that today and talk about Wisconsin and the taxes retirees pay. So welcome again to the Heritage Wealth Planning YouTube channel, my friends, the place you come to figure out taxes state by state by state. We also talk about retirement taxes from the feds, taxes on Social Security, how your Medicare premiums get affected by taxation by certain types of income. Lots of retirement, tax planning, Social Security discussions, everything under the sun when it comes financial planning related. You will find it right here at Heritage Wealth Planning YouTube channel. So don't forget to hit that little red button right there to subscribe. And then if you do subscribe, you got to make sure you hit the bell to be notified of the content we do, because we do about 5 videos a week or so, sometimes more, never less. And we'll keep you apprised on the latest financial planning because it's ever evolving, especially taxes. Taxes evolve each tax season, that's for sure, and the tax seasons never change. There's always an election, and elections always lead to different taxes, so we got to keep you apprised. All right, so Kiplinger's does not give Wisconsin any kind of favorability from a tax perspective. Gives them a dark blue. I've had some issues with Kiplinger's on other states, so let's find out if that applies here to the Badger State. First and foremost, the Badger State exempts Social Security from state taxes, but income from other pensions and annuities, IRAs, 401k plans are taxable. That doesn't shock me. The state offers some retirement income exemptions, some subject to limits. Property taxes are the 5th highest in the U.S., and that's a big problem. The median property tax on Wisconsin's median home value is about $3,500. Wow, on $165,000. That is significant. That's like 2% there. Ooh, man. 5% state sales tax levy, and municipalities can add 2% to that, which gives them an average of about 5.4, which is pretty low. Income tax, taxable income for married is $14,820 is 4% there. High is 7.65 for married filing jointly with 326. And again, that's taxable income. So for gross income, you got to add your standard deductions to get that. And so it'll be a little bit more when you factor in gross income. Effective tax rates are 5.5 across the board. So that's not low either. So we got high income tax, huge property tax, and then pretty low sales tax. But at least Social Security benefits are not taxed. So let's see what kind of exemptions they give us here. I'm just going to scroll down to IRAs real quick. All right, do they all qualify for exemption? I just want to make sure IRAs do. Generally, the same amount of your pension and annuity income that's taxable for feds would be taxable by Wisconsin, except for Social Security because they don't tax them. Certain Wisconsin state and local government retirees qualify for a tax exemption. All retirement payments from the U.S. military, Coast Guard are exempt. So basically, if you have some sort of U.S. Military or DOD, it looks like to some degree, Coast Guard, Commission Corps, NOAA, or Public Health Service, you're exempt. So that's good. Retired people whose income is less than $19,000, if married filing jointly, are also eligible for a work. And again, I don't know if that's taxable or a gross working families tax credit. The credit, I'm not even. I mean, $19,000, man, that's crazy. All right, retirees 65 and older can subtract $5,000 of qualified retirement income, including IRA distributions, from their Wisconsin taxable income, as long as their AGI is less than $30,000. Hey, all right, those age 65 or older are allowed an additional exemption of $700 and a deduction of $250. All right, so I don't know if this additional one is based on the qualifications for that's. I don't know. We're gonna have to find out from smartasset.com. So it looks to me like you don't get much of an exemption at all unless you have hardly any income. All right, so property taxes, homeowners and renters whose household income is less than $24,600. Again, I don't know if that's adjusted or gross or taxable. Get the benefit from the homestead credit, which is designed to soften the impact of taxes. Yeah, okay. The credit is based, okay. I mean, income of $24,680, man, that's tough. Most people aren't going to have that. The veterans and surviving spouse's property tax credit is equal to the amount of property tax paid during the year on an eligible veteran's principal dwelling. To qualify, a veteran must have a service-connected disability. All right, so if you're service-connected disability, Wisconsin is actually a pretty good state for you because they'll give you, looks like, a full property tax credit is equal to the amount of property taxes paid during the year on an eligible veteran's Principal dwelling. That looks good. All right, it's good. We talked about the property tax in Wisconsin. It's pretty high. There are no special tax breaks for seniors. That's not good. And state vehicle taxes, sales taxes charged at the state, set by the county, or charged by the county rules that there's no inheritance or estate tax. So far, it's not good. There's no way around that. So Tax Foundation says, state and local tax burden is number 4 in the union at 11%. Tax freedom day is in the lowest area 2 at April 27th. So sales tax is pretty low. At least the sales tax is pretty low. Of the 3, I'd rather have the property tax as the low. Of all the 3, to which I would prefer, which I could have the lowest, it'd certainly be the property tax. 5% sales tax and adjusted with the state, the local is 5.42. That's low, but given what I know now about the property tax, that's concerning to me. They hammer you on cigarettes and they hammer you on gas taxes as well in the top 20 on both. So definitely not tax favorable. And property taxes are, smoking high, 1.77. So the percentage puts them in the top 4 of the union in terms of property tax. So not a lot of good stuff there for Wisconsin here. Let's see what Smart Asset says about Wisconsin. That's Michigan. That's Wisconsin. In terms of just your retirement income, with Smart Asset does an income and retirement income. And what we're going to do is we're going to say 50,000 Social Security income, 50,000 of IRA distributions. We were born in 1952 and married filing jointly. Oh, that's not so bad. $1,800 because they don't tax Social Security. A lot of states are better, but that in of itself isn't huge. I mean, in fact, if you look down, the feds is $6,600, and the state in Wisconsin is $1,800. That's less than 2% on $100,000 income. The reason is because Social Security. Let's reduce our Social Security though, and watch this. It's not going to change our tax, but watch this. Reduce our Social Security and increase our IRA distributions, our taxes go up quite a bit. So that's a big deal. Again, Social Security planning. My goodness, this is now the 49th state I've done. If you do Social Security planning right, you can save yourself a huge amount of money in taxes for a long time as well, my friends, a long time. All right, so let's just keep going down. Wisconsin's moderately tax friendly. I don't get that. Just because Social Security is not taxed does not mean they're moderately tax friendly. I mean, I guess the bulk of your income is Social Security, but man, I mean, this is retirement income tax. So I get that, but geez Louise. All right, so let's keep going down here. I want to talk about the property tax again because other forms. I mean, so here's your married filing jointly tax rates. I mean, look at that, 5.84 in taxable income above $15,000. Man. Wisconsin has some of the highest property taxes in any state. The effective rate is almost 2%. This is the 5th highest in the U.S. Most homeowners in Wisconsin pay at least $3,000 annual property taxes, and many pay more than that. Overall, housing costs in Wisconsin are also slightly high at 4% above the national average. Homeowners who use the property as a primary residence and meet certain income requirements can get a property tax credit. But again, the income requirements are quite low. Sales tax are very low, so that's good. And then they don't have any state or inheritance tax or estate tax. So Wisconsin treats capital gains as regular income. If you have made an investment in the stock market, real estate, or some other asset, it's important to keep in mind the appreciation made by that investment will be taxed as high as 7.65. That is in addition to the federal capital gain tax of up to 20%. Eesh. I don't know, folks. Wisconsin, I mean, I've been there once. It's a beautiful state, but my goodness, they're going to hammer you on taxes across the board, except for sales tax. So, that might be something you move to Michigan or move to Minnesota and, slide on over to Wisconsin and buy up your groceries and whatnot. Actually, let's see. Our sales tax, they already have low sales tax. Wisconsin provides full sales tax exemptions on groceries. So if you're in Minnesota, snaking over the border to buy your groceries and drugs for no tax. So that's fantastic. All right. Well, I hope this helps, guys. Wisconsin, you got some work to do there. That's for sure. So if you like what you see here, don't forget to subscribe right there. Again, as I said initially, and then hit the bell to be notified of future content. And as always, a thumbs up, my friends. Thumbs up help me because it tells YouTube that people actually like the content. So a thumbs up would be helpful. And if you have comments, again, comments are critical. If you have some boots on the ground in Wisconsin, I'd love to hear them. I'd love to hear what's going on because I'm not there. But if you are, pipe in. Love to hear it. So see you next time on the Heritage Wealth Planning YouTube channel. Oh, lastly, don't forget the blog, heritagewealthplanning.com. You can go to the blog, you can go to the podcast. You got the videos there, all kinds of stuff, interactive calculators as well. So we'll see you next time on Heritage Wealth Planning YouTube channel. Thanks, guys.